Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and today we're getting an update from Wallbridge Mining, traded on the TSX under the ticker WM and on the OTCQX under the ticker WLBMF. And we are joined today with the CEO of Wallbridge Mining, Brian Penny. And Brian, it's the first time we've had you on the show, so appreciate you jumping on here to give us an update on Wallbridge Mining. Let's start off for those listening in, for people not familiar with the company. You're operating in the Abitibi region of Quebec. You're along that Detour Lake trend and Fenelon trend. You've got a lot of different land package, but your primary projects has been drilling at the Fenelon Project and the Martinière Project. You do have a lot of other regional targets, though. Maybe just give us a nice snapshot of where things stand today as far as Wallbridge and maybe some of the key work completed last year.
Thank you, Shad, and I appreciate you having me on this call. First of all, we're focused in the northern Abitibi. As Shad said, that we have two discoveries, one being the Fenelon Gold Project, which has about a little better than 4 million ounces. Martinière has about 1.3 million ounces. Fenelon is more advanced. We completed a PEA last year at 1750 gold on that project. And Martinière is just a resource estimate, but our goal in early 2026 is to complete a combined PEA on the two projects because they're about 30 kilometers apart. 830 square kilometers from the Ontario border to almost the town of Matagami. Lots of potential land there, lots of targets, two discoveries, more to discover over the years. And the Detour Lake mine is just on the other side of the Ontario border. We're on the same structure as Detour, and last year Detour produced 680,000 ounces of gold. A little bit about the history. With major discovery in 2019, acquired Balmoral, a couple of MREs. The most recent one was last January. We focused on an underground bulk mineable scenario, and that's what the resources that we came out with. What did we accomplish last year? Again, the updated MRE came out in January. We completed the PEA at 1750 gold in June. We drilled 49,000 meters on the entire property position. And we had an interesting new greenfield gold mineralization at Grasset that will be followed up at the appropriate time. And most importantly, we had 5 years without a lost time accident.
Okay, Brian, and then walk us through the plan for the 2024 drill season. What work strategy do you have on tap this year? And then we'll dig into the projects.
2024, we're looking to drill about 23,000 meters. What we were faced with, coming into the fall of last year is we're drilling and exploring in a great part of the world. Quebec has a refundable tax credit regime that you get back 37.5 cents because we're in the far north of every dollar you spend on flow-through eligible exploration that is not financed by Quebec flow-through, in the form of a cash refund when you file your tax returns and the audit is completed. To put it in point, in 2023, we just filed our tax returns last month, and we're claiming $8.3 million of a refund. Over the year, we've got 50-some million dollars of refunds, so it really helps finance exploration and maintain exploration going forward. We are fully financed. We closed the year with about $29.8 million in the bank. Our budget this year is $21.2 million for that 23,000 meters of drilling, and well funded for the year. And with that collection of that tax receivable, which we believe will happen in the fourth quarter of this year, we're looking to close the year with about 14 million in the bank, which, assuming we put together a similar size budget next year, there's not a heck of a lot to be financed at the right opportunity. Our 2024 goals, we're doing it in phases. The first phase is 2,500 meters of Fenelon drilling, which was completed earlier this year. The assays are pending, and news should be coming out on the first phase of Fenelon in the near foreseeable future. Phase one at Martinière, which encompasses of met drilling, exploration drilling, and then to help us with some of our studies on rock mass classification and hydrogeology, is about to be completed, and then those results should be, received sometime this summer. Then we move on to the second phase of Martinière. After a brief break, we're going to do some exploration of some of the regional targets in between, and then, depending on our success, we may go back to Fenelon to look at some resource extension drilling, or look at some other regional targets, or maybe even Martiniere. The entire program is success driven, so it can move around. I think I've answered your question and a few more.
Yes, you did, Brian, and that's nice. You gave us a nice overview of, what the team drilled last year on the ground and then what the plans are for this year and some of the drilling you've already started working on. Let's dig in a little bit more and just do it project by project. At Fenelon last year in the 2023 program, you'd really focused in on some of those other targets like the Target F1 and the Target F5. Is some of the drilling that you completed earlier this year following up on that, or maybe give us a little more color around the drilling that happened so far this year at Fenelon?
It's following up on that, plus it's looking for extensions. So, there's a combination of, maybe a few infill holes to fill some of the gaps that we perceive at this point in time. And we only have a PEA right now. We don't have a feasibility or a pre-feas. So, there are things that we need to get more knowledgeable of, and that's what we're focused on this year at Fenelon. And again, it's half the size of the program as last year. And the reason why we came to that conclusion is, you looked at last November when all the junior equities were trading at their 52-week lows, and you said, okay, if we go to a feasibility study or a pre-feas on Fenelon, we're going to have to raise a bunch of money and the dilution would be unpalatable. If we just stop doing anything and go into inventory, there's no news flow and that would be unpalatable. So we decided to raise 10 million of flow through and put together a smaller program to continue to advance the project, again, with the goal of the combined PEA by the first quarter of 2026.
Okay, and yeah, you're right. It's been a tough capital market. It's also been a tough reaction and sentiment to drilling news. Even if companies were putting out positive results, it wasn't getting a lot of traction last year. Now the gold price has popped up a couple $100 and people are paying more attention though, Brian. So when you did some of this drilling, was most of it just to jump categories or get it into inferred and indicated for that resource update? Or was there any new targets where you were doing discovery drilling? What was there a balance between the two?
A little bit of both.
Okay. And I guess we'll be getting those results out in the near term where we'll be able to dissect those together. But as far as shifting over to Martiniere, you've got the drilling that's mostly completed now. I guess walk us through some of the key initiatives there and what targets you were going after.
Well, Martiniere is, if you look at our most recent presentation, it's drilled down to about 400 meters. It's open in all directions. So, part of this year's program is looking for extensions. Martiniere is about 2 to 3 years behind where Fenelon is. And to put together a combined PEA by the first quarter of 2026, Martiniere needs to catch up to Fenelon. So that's why a little bit better than half of our drilling, about 60%, is focused this year on Martiniere. So again, focused on drilling a little bit deeper, focused on, filling a few gaps that we have within the resource model, looking at extensions, to get this in a position that a combined PEA is doable because the properties are 30 kilometers apart. So, a common processing facility seems to make a lot of sense, and hopefully we can unlock value as we go through this exercise. When we did the bulk sample in 2018 and 2019, we sent it to the Monarch mill outside of Val-d'Or, but, that mill wasn't large enough. The current version of the PEA assumes a 7,000 ton a day mill. And we think that's about the right size. But even if you look at some of the older operations in around the area, they're 1,000 ton a day, 1,500 ton a day mills, but nowhere near 7,000. So in all likelihood, we need to build a mill on our property.
And then as far as eventually getting to the next phase of economic study, like you mentioned, something like a PFS, what other work would you have to do as far as metallurgical or permitting or anything else that you'd have to do to lead into a study like that?
Well, if we break this up into the component parts, Fenelon has met work done already. And, the best met work for Fenelon was the results of the bulk sample. Our met work says we get 96% on the bulk sample. We had a 96% recovery. So myself being a CPA, that's a good check mark there. Martiniere, because Balmoral did some historic met work on that property about 8 years ago. And as the project has developed, some of that work is outside of where the mineralization is today. So we're redoing it this summer, both for hydrogeology, rock mass classification, and metallurgical. And, it's really important. And then we're doing all of the environmental work on both projects that we will need to file a project description at the appropriate time.
And Brian, I guess we should just briefly mention that in addition to Fenelon and Martiniere, you also still have the Casalt project that's optioned from Midland Exploration, and then Detour East that you've optioned to Agnico Eagle, operating right next door at the Detour Lake Mine. Any updates on those projects you expect in the course of 2024?
Well, in the case of Detour East, they have about 2 years to spend the balance of the money, 350%. So that's another $5 million to spend over that period of time. So I suspect that, we're going to see more activity than we have in the past on that project. And the reason why we entered into that earning agreement with Kirkland Lake Gold at the time, now Agnico, is we have 830 square kilometers of land out there. And being a small junior, we can't explore everything. The logical home for this was Kirkland Lake, now Agnico Eagle. And that's why we entered into that earn-in agreement. And, I think over the next 18 months, it could be exciting as, they spend to earn their 50%. On Casal, we have about $1 million and change to spend. And we have until mid-2025 to do that. And that will get us a 50% interest. And then we can increase it to 60%. But a couple of our regional targets are on the Casalt property. So it's anticipated we will be doing a little bit of drilling there this year.
Well, and just for people listening in, maybe not familiar with the project, or maybe they haven't revisited it in a while, Brian, just speak to the regional opportunities and just how big the land package is that Wallbridge Mining has under their thumb.
Well, we're probably one of the biggest landholders in the Abitibi. We own 830 square kilometers. And as I said, I'm a CPA, I'm a visual guy. And, 830 square kilometers is probably the size of Metro Toronto, to put it in perspective. So there's a lot of land out there. There's a lot of prospective ground there. We've had some discoveries. We've done, some till drilling to track the gold particles in the overburden and, track its movements to look for targets. We've done electromag surveys to identify our targets. The challenge is it's under 30 to 50 meters of glacial overburden, whereas in the southern Abitibi of Val-d'Or through Rouen, there's virtually no glacial overburden there. So the old timers outcrops came to surface, they discovered it, and that's why that area is so further advanced than the northern part. But the bedrock's the same, and it's just we've been successful at Fenelon and Martiniere, and we believe that there are other discoveries within that large property position.
All right, I appreciate breaking that down. And then I guess we should mention that one other value driver for the company is that you do have exposure to Norx Nickel, previously known as Archer Exploration. This is some of the nickel assets that Wallbridge spun out. Just yesterday, you released some news that you had purchased some more shares in that company, but it was really a different transaction. I think a lot of people are confused as to what was happening. When you explained it to me off mic, it's actually very simple. So maybe just break down the exposure to Norx Nickel.
Yeah, thank you very much. And, as part of the transaction, Archer/Norx Nickel assumed the closure liabilities for Broken Hill. And part of that was they had to file a new closure plan, provide the financial assurance, and then Wallbridge would be released from our bond, and then we'd get the cash back, which is located on the balance sheet in long-term restricted cash. As Archer was looking to raise money, we decided that it would be appropriate for us to support it for the amount of the cash we're getting back from releasing our financial assurance, and the cash back come with us to show support of Archer as they go forward. So simple as that. There's no money coming out of Treasury. It was already restricted cash, and we're just reinvesting it because it was sitting as restricted cash for probably 10 years now.
Appreciate that update, Brian. That keeps another fishing pole in the water over there. But obviously, Wallbridge Mining still mostly focused on gold and focused on exploring Fenelon and Martiniere. Is there any other value drivers that you see coming down the pipeline in 2024, key milestones that you really want investors to watch out for?
Well, I think that, everybody in our sector a lot of shareholders are a little bit upset that the junior equities are not following gold prices. I've been in this business for 30 some years now. And generally what happens is when gold rises, especially as quickly as it has, the junior equities are slow to follow. They will come around. I would suspect we're going to see higher valuations for junior explorers later on this year, maybe early next year. The money is starting to come in the seniors. They're seeing their valuations are improving, and it will eventually filter down to the juniors. There's not much institutional participation right now in the junior side, and hopefully that will come in as well, which will help us improve our valuation. So we need to keep our head down. We need to stay focused. We need to drill for results. We need to set deliverable targets and deliver on our targets. And the market is, in my opinion, poised to re-rate the juniors at an appropriate time in the future.
All right, Brian. And then one more question here. I have had a couple people email me asking, when are the assays going to come back? And I know you probably can't read the future, but do you have a general idea of when we could start seeing some of the assays hit the news wires?
Well, what I can tell you is that if you go back 3 years, when we switch to the next year's drilling, the first two digits are the year of the drill. In the last 3 years, our first results from the current period happened in May. So, what I can tell you is that our first program of Fenelon has been completed. The assays are pending, and hopefully history will repeat itself and we'll have some results out later this month.
All right. Yeah, here we are in May, so hoping for that. And I know a lot of people are waiting in anticipation to see some of the drill results come back in from both projects. We'll keep following along with Wallbridge Mining, though, and that news as it comes out. And if you'd like, Brian, get you back on for an update at that time. For those that want to follow along with the news to the company, definitely click on the link below this interview. It takes you right over to the news section on their website. And Brian, I appreciate you spending some time with us today here at the KE Report. Looking forward to our next conversation.
Thank you very much. All the best.